You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 2nd day of February, 2024. It's also First Friday. If you live in the greater Phoenix area, every Friday night, about 100,000 people pour into downtown. And, man, it's like a street festival. There's musicians and Rastafarians and, oh my gosh, you name it, it's there. Patchouli is heavy in the air, along with other aromas. And First Friday started out as this little thing, a little handful of people. And we were part of it 20 years ago. Our church downtown, we turned the lobby into an art gallery. And there's a little bus and long story. So we have a long history with the First Friday. And as many of you know from videos that I post in the Breeze channel, that's our private social media channel, sometimes I go to First Friday and have a good time. And because my grandson, little D's, turning 18 tomorrow, you just might find us tonight at First Friday. So if you're in the greater Phoenix area, come on down. To the rest of you all over the world, thanks for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. The first live broadcast is private, members only, and those taking the 1 week free trial. If you've not taken the 1 week free trial, you can do so right now by going to mytradingiq.com. And at the very top of the page, there's a link that says 5-day free trial, no credit card required. Click the link, fill out the registration form properly, please, so that we actually get it. And then same day, today, we'll get your desktop set up, get your indicators indicating, and then you'll have the whole weekend to get familiar with the indicators. Then you'll be ready when the live training room opens Monday morning at 9:20 a.m. Eastern. Now, we actually go to work Sunday night at 6 p.m. Eastern, so you'll have access to that too. You see, futures trade around the clock. We have traders around the globe, and so our workday begins not at 9:30 a.m. Eastern like the Wall Street folks. Our workday begins 6 p.m. Eastern when the Globex markets open. So, by getting signed up for the trial today, you can join us Sunday night and, of course, all of next week. And when you take the trial, you're not just getting access to the live training room. You're getting access to every single resource that our lifetime members have access to, with one exception. The members only workshop on Thursday night. You have access to one-on-one mentoring, the Logic 247 alerts, the concierge trade alerts, the discussion group, the indicators, the platform. I could go on, but I'll stop there. So it's at the top of the page, mytradingiq.com. 5-day free trial, no credit card required. Click the link, fill out the form correctly, and behind the scenes we'll spring into action, get you all set up and ready to go. Now, this isn't just another set of indicators, another set of oscillators, or a few cherry-picked videos. This is live trading in real time. Been around since 2005. We've trained thousands of traders over the years. So if you're sick and tired of being sick and tired, and you actually want to learn how to trade, the first step is to take the trial so that you can then make a well-informed and intelligent decision as to whether or not trading is right for you. Now, once the live training room ends at 11:30 a.m. Eastern, take a 30-minute break and come back for the afternoon broadcast, this broadcast at 12 noon Eastern. Now, this broadcast, unlike the first broadcast, this broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. Best way, because you only have to do this once, from mytradingiq.com and scroll down the page till you get to the part where it says afternoon broadcast. Click that link, complete that 30-second registration form, and you're done. What will happen is going forward every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. At 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. Benefit of that is that you have access to the question box, so you can ask questions and participate in the discussion. Now, of course, there'll be days when you're out of the office, away from your desktop, but you'd still like to join the afternoon broadcast live. You can. And there will be days when you're busy and can't join live, but you want to get caught up later. You can do that too. Of course, I'm talking about our YouTube channel, youtube.com/CFRN. youtube.com/CFRN. Super easy to remember because you already know the YouTube part, so you just got to remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,400 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but you can see how we've evolved over the years. Thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, 3 years, even more. Just pick a couple days at random. Listen in a little bit. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. youtube.com/CFRN. Let's get started with our daily devotional and word of prayer, as we do every day. Then we'll get into the markets. Then about 12:45, 12:50, Michael will join us, give us a recap of what happened in the live training room this morning. Then we'll go live on the TradingView platform for 30 minutes, do some live trading, and then we'll wrap things up with our good word for the day. The topic of our devotional, which we began last week, is how to be rich God's way. Our scripture today is 1 Timothy chapter 6, verses 6 through 10, and I'm going to share with you from the Message translation. A devout life does bring wealth, but it's the rich simplicity of being yourself before God. Since we entered the world penniless and will leave it penniless, if we have bread on the table and shoes on our feet, that's enough. But if it's only money these leaders are after, they'll self-destruct in no time. Lust for money brings trouble, and nothing but trouble. Going down that path, some lose their footing in the faith completely and live to regret it bitterly ever after. So let's talk about the great gain, contentment. There's a concept we don't hear much about. And let's be honest, isn't it discontentment that fuels our unnecessary, irresponsible, and at times harmful spending? Paul goes so far as to say that contentment is great gain. Translation: contentment is more valuable than the things you acquired because of your discontentment. Looking back, we know this to be the case. Have you ever regretted a large purchase, also known as buyer's remorse? If you could go back and choose contentment with what you had over the purchase your discontentment caused you to make, wouldn't you have done it? Of course. Why? Because with hindsight, you can see the value or the gain of opting for contentment. Opting for contentment would have actually made you richer. If you are truly interested in gain, contentment is the ticket. How can less stuff result in greater contentment? Great question. The answer is found in an observation regarding the nature of appetites. If you feed an appetite, it grows. Satisfying an appetite does not diminish it, it expands it. To diminish an appetite, you have to starve it. Paul understood this. In fact, he took this principle to a logical but uncomfortable extreme when he wrote that letter to in 1 Timothy. For we brought nothing into this world, and we can take nothing out of it. But if we have food and clothing, we will be content with that. Fighting for, pursuing, and embracing contentment always results in gain. Every time. At multiple levels. And that brings us to a most important question. How do you say enough in a world that has fine-tuned its messaging so as to make you continually dissatisfied with everything you currently own? The answer is found in a single word. A word that works for us or against us. If you are carrying debt on something you wished you had never purchased, then you know all about this word and the power it wields. I'm convinced this single term holds the key to disarming discontentment. We'll continue with that on Monday. Join me in a word of prayer. Heavenly Father, we're thankful for the wisdom we found today in 1 Timothy 6. Lord, these verses remind us of the importance, godliness, and contentment in our lives. Help us to find our greatest gain in the pursuit of righteousness and faithfulness to you. May we be content with the blessings you have provided, recognizing that true wealth lies in our relationship with you and not in material possessions. Guard our hearts against the temptation to pursue riches at the expense of our spiritual well-being. Help us to avoid the traps and snares that come with the love of money, which can lead to foolish desires and ultimately to ruin and destruction. Lord, may our desire for wealth never overshadow our love for you and your commitment to living according to your will. Keep us anchored in your truth and grounded in your word, that we not be led astray by the deceitfulness of worldly wealth. Grant us the wisdom to use our resources wisely and generously for the advancement of your kingdom and the well-being of others. May we be faithful stewards of all that you have entrusted to us, knowing that we will one day give an account for how we have used what you have given us. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. Happy Friday. Everybody's been working for the weekend, and here it is. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow up 28 points. The NASDAQ up 240 points, which is over 1.5%. S&P 500 up 45 points. That's almost 1%. But my concern lies with the Russell 2000, our man in the street, which is down 16 points, and that's almost 1%. Question, obviously, is the Russell going to try to catch up with the other three, or is the Russell actually leading the way? Now, there's no one index that always leads the way every day. If there were, that would just make trading too simple, right? But often, the Russell can shed some light on where the direction of the market's ultimately going to head. So, we're not making a prediction here, just an observation. By the end of this broadcast, the Russell could very well be in the green as well. In the commodity basket, crude oil is down $1.60, trading 72.23 last. That's a drop of over 2%. Gold down $18.30, trading 20.52.80 last. That's a drop of almost 1%. Silver down 52 cents, trading 22.71 last. That's a drop of 2.25%, or a little over $2,500 per contract traded. The Asian markets at the close. Nikkei posted a gain of 146 points. Shanghai dropped 40. The Hang Seng fell 32. And in the European markets at the close, FTSE down 6. The DAX up 59. The CAC up 3.5. So that gave us a mixed day in Asia. It was a mixed day for the UK. And at the moment, it's a mixed Radio Friday here in the US of A, with 3 of the major indices in the green, the Russell 2000 being the only one in the red by roughly, well, just shy of 1%. So, let's take a look at Logic 247. That's our 24/7 around-the-clock E-mini alert service. This has been a very unusual week. Been some unusual market behavior. And of course, we had the Fed announcement. And when the rates didn't go up, the market dropped like a rock. And then it bounced. And that brings us to today. We're currently in week 287 of Logic 247. That's how many weeks ago. First, we had a beta test. And now we've been live for 287 weeks. That's a good portion of my life. This recap was done this morning at 6:30 a.m. Eastern by Valerie. She will update it for the week, finalize it for the week this afternoon, this evening. At the time of the recap this morning, since the markets opened Sunday night at 6 p.m. Eastern, he issued a total of 43 alerts. 2 never triggered. Actually, one of them did trigger, but we'll just go with this. Still waiting on 7. 34 actionable alerts, of which 8 or 24% would have been stopped out based on not risking more than $300 per contract per trade, based on market structure and a very simple process that we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Over the last 287 weeks, we've averaged 20% or less of the alerts being stopped out, again, based on market structure and just that very simple process that we teach all of our lifetime members. Now, we launched Logic 247 287 weeks ago. But long before Logic 247, we had our original alert service, the concierge trade alerts. And those are a little bit different. The Logic alerts can come out around the clock, 24/7, 2 a.m. or 2 p.m. Because futures trade around the clock and we have traders around the globe. The CTAs, on the other hand, are published as a static report shortly after the Globex open each evening. So last night at 6 p.m. Eastern, that's the beginning of the Friday session. 10 minutes into the open, I was able to get the CTAs published. Now, all of our members had these targets at 6:10 p.m. Eastern last night. Because this broadcast is open to the public, if you're not a member or trial member and you want to grab a screenshot, go ahead. Or if you're watching after the fact on our YouTube channel, youtube.com/CFRN, just hit the pause button on the video and jot down the numbers that are important to you because of the markets that you trade. Because we're going to walk through every market before this broadcast ends. Now, when the report comes out each evening, the first thing you want to do is go to the 30-minute chart of whatever market you trade or are learning how to trade. We use the ES as an example. When this report came out at 6:10 p.m. Eastern, you would go to the 30-minute chart of the ES and make a note on that chart where price was at that time. It's always going to be between these two numbers. Then you draw a line in the sand at the long target, draw a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That part's pretty simple. Now, the BBC is the green line you'll see on my charts, both on the daily and on the 30-minute, where all the alerts are created. When price gets above that green line, we're bullish and anticipate higher prices. When price gets below the green line, we're bearish and anticipate lower prices relative to whatever time frame you've applied the BBC. It simply stands for bull, bear, cross. Price crosses above it, we're bullish. Price crosses below it, we're bearish. Again, relative to the time frame you're looking at. Now, with the logic alerts, I look left for you to spot potential obstacles to the trade. Previous swing highs and swing lows that could become current resistance or support. The purpose of the alerts is to help you learn how to become self-sufficient. The logic alerts, there's time built in. You to get the alert, go to your 30-minute chart, see the window of opportunity that it represents, and understand why there are multiple targets. The initial target is designed to help you get your goal for the day. But with many of the logic alerts, you'll see 2, 3, 4, 5 targets and then a final trade to target. If it's a long alert, then the final trade to target will be the weekly trading zone above. If it's a short alert, the final trade to target will be the weekly trading zone below. Now, with the CTAs, that's the next step in your learning process. With the logic alerts, you learn how to look left and spot the potential obstacles. So then the next step is the CTAs, where you look left yourself and spot the potential obstacles. And yes, in the beginning, you can use the logic alerts as sort of a cheat sheet. But if your goal is to trade for a living, that will never happen as long as you're dependent upon someone else to tell you when to get in and when to get out. You've got to learn to be able to look at the chart, read it like a newspaper or a mystery novel, and instinctively know what the next high probability move is. We've published the weekly trading zones since December 14th of 2009. They come out every Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And Again, over time, you'll learn how price behaves at a weekly zone, and that's important because price is always trying to get to a zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to get to the zone above. And if price is below the 30-minute BBC, it's trying to get to the zone below. Price is always trying to get to a zone. Just resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Let's go look at the daily chart. Now, we had a powerful thing happen yesterday afternoon. We hit that 38% fib extension that we talked about during the broadcast. We also took out this high. So we're going to adjust our fibs to embrace the new high. That's pretty close. Now, if price continues to rise, now you notice the bottom fib, it didn't move. That's because when I clicked it and hovered, I waited for it to turn green. Okay, that way I'm moving everything except where I've anchored it. From the swing low to the swing high, this is the 24% fib retracement. Here's the 38, the 50, the 62. Now the fib extensions are drawn from the most recent swing low on the daily to the swing high to the retracement low, and then that projects into the future where the market is likely to find resistance, as it did yesterday right at the 30% fib extension. We had a slew of quote-unquote good news this morning, if you believe those economic reports in a presidential election year anyway. That's, that's between you and your wallet. Okay? But we put in a new high. And so no matter what you think about the economic reports, you can't argue with price. Okay? No matter what market you trade, no matter what time frame you use, the clock on the wall is always price. Now, you might think, well, I don't believe price should be that high. Or you might say something like, well, price can't go any higher. You'll learn, painfully enough, you don't say those things because you have no control over the market. Market doesn't even know you exist. Of course, it feels like it when you get stopped out to the tick. My office is bugged. They're watching me. Don't fall for those urban myths. It'll just mess your head up and make the business of learning how to trade more difficult than it actually has to be. Okay. So what do we have for a high today? Can we get a picture? 83.25. So we're a little high. Let's see if we can get that down to 83.25. Although we're still climbing right there, 83.25. Wow, that was like magic. Now, why are we looking at a daily chart? None of us trade a daily chart, right? Okay. Because the institutional traders, the ones who actually move price because of the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So no matter what you trade, whether it's a futures market, an individual stock, crypto, Forex, ETF, just spend 2 minutes with the daily chart before you begin your trading session. Because in doing so, you're looking over the shoulder of what the institutional traders are looking at. And if they're buying, do you want to be selling? And if they're selling, do you want to be buying? Of course not. So again, just spend 2 minutes, see which way the wind's blowing, and then drop to your smaller time frames. Now the 30-minute is our roadmap. That's where all alerts are created. Okay. The 30-minute chart helps us to see where the windows of opportunity are. And then we actually execute on the 7-tick range chart. Or you can execute on a 5-minute chart or a 10-tick range chart, just something that's smaller than the 30-minute. It allows you to enter a trade with more surgical precision, if you will. So this was the opening candle last night. So 10 minutes into the life of this candle is when the CTAs were published. These are the lines in the sand I spoke of. Okay. Now, before we would trade to this short target, we would know that price has to get below this zone and that swing low. Price did drop below the BBC, but where did it find support? At a zone. When price drops to a zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance till proven otherwise. Resistance always sends the market looking for support. Support always sends the market looking for resistance. And look how we had this beautiful perfect stack yesterday. Price, step line, blue and climbing, and the BBC. And this was the closing candle yesterday afternoon. This was the opening candle last night. So we got below the BBC and we did drop to the zone below at 49.33/34, which we expect to be support till proven otherwise. Support will then send the market looking for resistance. We traded through the BBC. The pullback holds more often than not. This is again some of that unusual market behavior that I spoke about earlier that the market has been demonstrating this week. We have hit the long target once we closed above here and then cleared all of these previous swing highs. From 49, this candle opened at 49.65 and ran up 13 points to the target. That's $650 per contract traded. If you earn the right to trade 10 contracts, that's $6,500. And overhead is this week's highest weekly trading zone, 49.99/5,000. Now, buyers would really have to show some commitment to get us there today. And I'm not convinced that this whole move isn't a bit of a head fake. But again, when those positive economic numbers come out, whether they're factual or not, in this case, the market is responding positively. Remember back on Wednesday when the Fed did not raise the interest rate, prices dropped. And everybody's scratching their head, huh? See, there was a time when good news always sent the market higher, bad news sent the market lower. It's not the case anymore. It's become a little more complicated than that. But we know what price is trying to do. It's trying to get, remember, it's always trying to get to, if it's below the BBC, it's trying to get to the zone below. It's above the green, this is the green line, the BBC, bull bear cross. Prices below it were bearish. expecting lower prices. And once price gets back above it, we're bullish, expecting higher prices. Okay. On the Dow, here's where we opened last night. The vertical line separates today, Friday, from Thursday, from Wednesday. And so here's the opening candle last night. Now we've got resistance overhead, support below. Price pulls back to the BBC. The pullback holds. It holds more often than not. But you've got to get above red and falling before you decide to enter a trade. And so on this candle here, got the perfect stack. Price, step line, blue and climbing, BBC. So this candle opened at 38,640, we'll call it, and ran up 50 points to the target. It's $250 per contract traded. The 10 contract trader, it's 2,500 bucks. When the market finds resistance, now notice this resistance. This is Friday, this is Thursday, this is Wednesday. See that spike high Wednesday? That's the same as that high right there. Okay? So when the market hits resistance, it's going to go look for support. So it drops below the BBC. That pullback didn't hold. This one held, this one held. This one traded through. Took us all the way down to the weekly zone. We spiked at the zone. We hit the short target. First time to the tick. And we bounced and hit it again. And then we bounced and almost hit it again. Then we get above the BBC, and that takes us where? Right back up to the long target. Two-sided action. We had a lot of two-sided action yesterday. In fact, I posted charts of those in the discussion group. So whether you're a member and have access to the members-only discussion group, or if you're on the trial and have access to the trial discussion group, you should go and look at those charts from yesterday. By two-sided action, what I mean is we hit both the long target and the short target. And in this case, we hit the long target again. And all of our members had these targets 10 minutes into the life of this candle last night. On the Russell, here's where we opened last night. Ran up to the weekly zone, which we expect to be resistance, still proven otherwise. And we consolidated along the BBC, but we were unable to take out that high. And when price can't break resistance, it's going to go look for support because it has found resistance right there. And down we go. Actually trading through the zone down to the target. We consolidated at the target. These are 30-minute candles. 1, 2, 3, 4, 5, 2.5 hours. And then the low right here sent us back up looking for resistance, which we found basically at the zone. It spiked up and tried to hit the BBC, but it wasn't quite able to do it. And now where are we? We're back at the short target again. On the NQ. Here's where we opened. consolidated sideways right at the zone most of the night until this morning. And we got a drop to the zone where we found support. Support sent us to resistance. Got through that resistance, ran to the target, and then we hit the weekly trading zone at 17,751. Now, again, all of these zones were published Monday morning at 6:15 a.m. Eastern. And like I said earlier, once they are posted, they're carved in stone for the entire week. They do not change in any way whatsoever. Michael, did I hear you there?
Yep, I am here. Yep.
All right, guys, we will pick up with crude. As you can see, crude opened last night right here, pulled up to the VBC, which we expect to be resistance, dropped to the target, continued down to the zone, which we expect to be support until proven otherwise, and it's been consolidating there for 1, 2, 3.5 hours. So we'll pause here and we'll complete this recap after Michael gives us a recap of the live training room. And then we'll go live on the TradingView platform for 30 minutes. And then I'll be back, finish that recap, and close the week with our good word for the day.
All right.
Looks good.
Here we go. All right. Good afternoon, everyone. Today's Happy Friday, the second day of February 2024. I almost said 2022. 2024. If you've not taken a free trial with us and you want to, go here to mytradingiq.com and click on this right here. When you click that, you'll be brought to, actually not this page. I gotta hit refresh on that, but you'll be brought to a page just like this. That's gonna be good for next week, right? And once you click that button, in this page, all we ask for is your name, your email, and your phone number. And down here at the bottom, if you have TradingView, give us a TradingView login ID. If you have an Ninja Trader, give us your machine ID. Right? That's all that we need to set up your indicators for you. All right. All right. Spreadsheet. We had a pretty good day today. This was last month. Here we are. If you're going to read this sheet, you have to read all the CFTC risk disclosures down at the bottom. Again, to take the free trial, I forgot to say this all morning in the live stream. I let the live stream run for an hour this morning, and I forgot to say this. Oh, I think I forgot to say it. If you haven't taken a free trial, click on this right here. I'm sorry, click on this purple button right here. There's no credit card required for the trial. Okay. I didn't even start the live stream yet. I'll get it one of these days. Anyway, if you're going to read the spreadsheet, you have to read all CFTC risk disclosures down at the bottom. Today's the second day of February 2024. We're up 116 ticks on the NQ, 20 ticks on the Russell, 11 ticks on crude, and we were break even on the ES. Did we even trade the ES? Oh, we were not break even on the ES. I take that back. We're minus 10 ticks on the ES. We stopped out on the ES. We're at 665 on the morning session. So all that stuff I said at the end of the session this morning, I forgot to put in that minus 10 on the ES. And this morning, it took 18 minutes and 7 trades to get to the goal for the day. At that point, we're up $3,290. That is with 14 contracts. That's a lot. And so we took a total of 25 trades in the room. So on the month now, we're at $975 a contract over 2 business days, averaging $487 per contract per 2-hour business day. On the year now, we're at $10,562. So we're 23 business days, averaging $459. That's pretty close. $459.24 per contract per morning session. If you were to quit trading when you get your goal for the day and you were to add 1 contract per month starting in January of last year, so you'd be on 14 contracts now. So far this year, you would have only had to work 9.61 hours and you would have averaged $4,762 per hour. That is starting with the 20 blueprint beginning of last year. I'm gonna finish up this column over here that keeps track of the 2 added with 1 and adding 1 per month. Okay, I'm gonna do all that too, and it'll have a starting from this year with 1 contract number over here. Okay. All right, so let's get into the trades. Let's get into those trades now. The crude oil, there was another trade I had on crude that I break even on. But I think I forgot to mark it. This one right here, I think. No, that was the first one that I took on crude. We got 2 ticks on that one, and a break even on that one, and 9 ticks on that one to get us to plus 11 on crude. And I think there was another one that I took this morning. I think it was right in here somewhere. In here, one of these right here. I think I got something on, but I remember when I stopped break even, but I don't remember anything. So either got out of break even or I got some big profit, and I haven't yet to see which one. Probably break even. Anyway, we got plus 9 on this, and over here we didn't do anything. We were getting into the end of the session during the break. That's not good there because the black line is a green. It's in the silver. So you need to come out of the oversold. You gotta have the slingshot when it's not in the right color. That's what you got right here. You had the slingshot going with it. That's why you got your green arrow there. Same thing there. Blue arrow right here. Looks like it would have stopped you out exactly to the tick, but it's right inside the weekly trading zone, so I wouldn't have done that anyway. And that green arrow went right back into the zone. And that was it for the crude today. Now the Russell. Let's see here on the Russell. We'll go all the way back to the beginning here on the Russell. All the way back to the beginning on the Russell. We didn't have that many trades on the Russell today. We had a bunch on, but on the Russell, not so much. Wow. All right, here they are right here. We started off on the Russell here with 5 ticks on the first trade. Then we had a couple of break evens. And then we didn't do anything for a long while, it looks like, here on the Russell. I think I was so focused on the NQ that I wasn't doing anything with the Russell. This one over here was the next one we did on the Russell. We picked up 15 ticks on that to get us to plus 20. You can see the blue arrow there, blue arrow there, blue arrow there, blue arrow there. All those blue arrows worked out with that blue arrow. They all worked out. This one going right into the zone you wouldn't do. And that was it, getting right into the break here. We had this last blue arrow right here during the break. Worked out okay. The green arrows worked out well too, most of the time. Okay, they worked out pretty well too, most of the time. All right, and that was the Russell. We ended up with plus 20 on the Russell. Times 12.53. Okay, now we have plenty of time. We hadn't traded on the ES this morning. One ES trade. Oops. Put this back. One little trade here on the ES, and that was right here. We ended up with a stop out on that one. Stopped us out pretty much to the tick. When I did this, I stopped out on the NQ at the same time. I had to stop out on this and the NQ. That was a rough couple of minutes for me there. But we got it all back. Not on the ES, but on the NQ, we got it back. And then some. I'm going to give some of that back too. But just the blue arrows here this morning. We had a lot of no trade zone in here. A whole lot of no trade zone. Since we started at 9:15, there was a green arrow here that was going into the zone. It would have been a break even if I did take a blue arrow that I did take. A green arrow here that went somewhere, and that was it. The ES just wasn't giving up today. There's a lot of no trade zone in there on the ES today. Okay, and we did have news today. It's kind of almost a joke. Go and look at this news. The non-farm employment change, almost double what they expected. And the unemployment rate better than expected. Average hourly earnings, twice what they expected. Twice what they expected, average hourly earnings. That's just crazy. I'm surprised they didn't make this number like, consumer sentiment. Well, if all that happened, well then like 150. And the inflation expectations, so that should be a 1. I don't believe it. Anyway, sorry. Just my opinion. My humble opinion. Don't trust any of those numbers. Trade what's in front of you. Trade what is in front of you. All right, so we had a whole bunch of trades here on the. Get back to the beginning here. We'll start there with them. Okay. Here we go. Here we are. All right, so right here we had a shorting opportunity right there. Okay, and on that one, we picked up 8 ticks on that one. We had the way we started out this morning with the markets. We had a few trades that were, we started out trying to get the goal for the day. I was trying to get it. We were like 2 or 3 ticks away from it. And I hadn't gotten it. If I'd held on to that one just a little bit longer, we'd have gotten it with that one. But I got this trade over here, and somehow I don't show anything for profit on this. I didn't take that one. Okay, I didn't take that one. I took this one. I was looking at the blue arrow. I was like, I took that one. I don't remember taking it. All right, so we took this one. I got a break even on that. And I took this one. I got 30 ticks on that. That's where we got the goal for the day on that blue arrow right there. So the sun blue arrow, it's a green arrow, but this blue arrow up here. So we were 38 at that point. That's where we got the goal for the day. The next one that we took was over here. We picked up another 30 ticks. It put us at 68. And the next one we took was right here. We got 12 ticks on that, put us at 80. And the next one we took, in here, I think we took this one too, and we got another 30 because we got up to 110. Then we stopped out. It could have been this one that got us to 110, but something got us to 110. And this one dropped out, went to 90. I got that, got us to 94. And then I stopped out again, and I was down to 74 right there. I remember saying I was all the way down to 74. And I grabbed 30 ticks on that one to get me to 104. Then another 30 ticks to get me to 134. And then I stopped out somewhere. Stopped out right there to get me back down to 114. Another 30 ticks right there to get me to 144. And I stopped out again, back down to 124. And a break even, and I stopped out again. Now this one right here, I don't know how I ended up stopping out on that, but I ended up stopping out again to get me down to 104. Then I got 4 ticks there, 108, 4 ticks there, 112, and 4 ticks there, 116. Whew. That was a lot of trading today on the Q. I was really kind of focused on the NQ. And during the break, blue arrow there worked out really well. Blue arrow there worked out really well. 3 of them in a row right here. Now the thing about the blue arrows, I just could point this out. There's a blue arrow here that would have been enough to get a break even. The thing about the blue arrows is once you get one, you can't take any arrow after it. None. Once you get a blue arrow, whether you take the trade or not, you can't take another trade in that direction until you continue the trend. Right? Like this just finally continued the trend. So whether you took this one or not, you can't take any of these. Right? Until you continue the trend. And this just continued the trend. So this is just about to set up with an opportunity to go long right here. Matter of fact, I'm just going to start. Oops. I was just going to start the live stream up. Hang on, I got it on the monitor here. Another thing. Somewhere here. Here it is. I'm just going to start the live stream up right here. I know we have another minute to go, but I'll just start it here because this is a trade that's setting up right here. We ended up the morning session. Well, first, let me just go through this. I just want to look at just the blue minute. Okay, if we take off all the other stuff, we take off most of the other stuff. We'll leave all of that and that and that. I just want to give you guys a different kind of look at this. Okay, just the blue arrows. You have it like this. Or the BB and the ribbon is right there. The black line, the trend. You can see when price pulls back in and the shot is ready to go. Those trades there you can be really proactive on. Okay. Not on that. I had a horrible entry to begin with, I know, and I didn't move my stop fast enough at the same time. But right here, when you have it just like this is just the leading edge of the ribbon, the BBC, and the BB3 is what, and I just kept the blue arrows on. You know, some of you guys just like to trade the blue arrow. Like if you just had that stuff on there. You know, you can tell when ahead of time when you're not. Good idea when you're gonna get a blue arrow and when you're not. The green arrow would have been a green arrow because that pulled back and it hit the black line. One was coming off the ribbon, coming out of the oversold. That's why you got a blue arrow right there. This one coming off the ribbon, out of the oversold. That's why you get the blue arrow right there. Okay. So if you ever just wanted to just trade the blue arrows, that's how you would do it. That's the best way to do it, I would think, if that's what you're considering doing. And when they did really well today, blue arrows did really well. I mean, you only need one of those, right? You only need one of those to get the goal for the day. You don't need to hit every one. All right, just wanted to point that out. So you want again really slow. All that I left on in here is the BBC ribbon and the BB. I took everything else off. Well, I left those two on, and then down there, I this off. So right here, to get a blue arrow, it's got to pull down and hit the ribbon, and it's got to get into the oversold. Right. So if that's all you're looking for, you can get rid of everything else. If that's all you're looking for, and that'll be all you need, really. But let's put it all back. Well, you know what? I'll just leave this over here. We'll just trade blue arrows right now on the NQ. All right. We're getting enough of them that it should be something we can do. We might have one or two here in this session. Now the live stream has begun, so we can jump into the live stream or do the live stream. When it comes out of the oversold right here, if I had black arrows on right now, it gives us a black arrow. Now it hasn't hit the ribbon yet, so it's not going to give any kind of an arrow. Well, it'd give a black arrow right now because it hasn't hit the ribbon on and up close. Okay. If I had the black arrows on, you get a black arrow right there. I know that's a black arrow. Oh, it's actually a blue arrow. Brought the ribbon up into it. Okay, well I just took it. Here, we're in it. Okay, we're in it to win it. I don't have a great entry, but I'm hitting break even on it right now, and I'm gonna lock in 4 ticks, and I'm out with 4. Okay, so it brought the ribbon up into the bottom of it right there. That's how the arrow ended up being blue. All right, well now that we've taken that, it's got to put in a higher swing to get another one. Okay, it's got to put in a higher swing to get another one. So where are we at? 7-2. Let's see something. Mike R sent me a picture earlier this morning. All right, yeah, okay, so you got it. 578 is what you had. So 678 is what you need to get. And I've been saying this morning, looking at the bigger picture stuff in here this morning. Not so much, well, on the S2, but on the NQ particularly, how this right here, when all we had to look at was, this information right here. See this right here? And if I roll this up, the same information is here. I was saying that if we got the up close on that bar, well, not on that bar, on this bar over here, where it did close, I said that should turn into a really bullish afternoon because this is what happened after. And so far, so good. It's been really bullish, and that's what I was saying this morning. For anybody that was watching this morning, you may remember me saying that. All right, so right now we have no higher swing here on this. We need to get a higher swing to get another trade set up in that direction. Okay, that means price has to get up above this level right there. Okay, it's got to get up above here right now to give us another opportunity to trade. We haven't gotten into the oversold again here either, so it's really going sideways right now. None of these other marks are really giving us anything right here. Let's go look at other stuff. Right, here's SPY. Now those put options were worth a ton this morning. But now, and not so much. All right, their time expired and a value expired on them, pretty much. All those options I was talking about the last few days with the SPY and the QQQ. That's the thing with options. When you have profit in them, you got to take it. All right, so we're thinking that was going to get down to there and bounce up. It almost got down to there. Not quite. That was QQQ. Look at Bitcoin. When it catches up. Here it is. I'll look at it on Coinbase. daily. All right, so the Bitcoin is still back up here. The way it's just looks like it's settling in right here, consolidating right on top of the ribbon right there. So it's kind of acting like this over here right now. It's acting like this, where it consolidated sideways for a couple of weeks. What was the other one? It was Mr. that we had in a box. Is that what we had in a box? Yeah, still in the box. I gave blue arrow for the short right there. Is that fella DJ? I think. What's his name that asked the question the other day about those stocks that he said were AI? I don't know if he's listening, but he is. But don't know who it is. Anyway, so this is back in the box. That was Mr. And Mara was the other one. And that's got 2 blue arrows now on the daily. All right, now the first blue arrow didn't put in a lower swing, so the second blue arrow doesn't really mean anything. All right, the first blue arrow is what you're still working on here. And you'd be expecting it to get down here to the prior swing low. That should be expecting at least that out of it. Okay. Let's see, we're almost back down. We put in the higher swing, I think we did. We're almost, we did. Okay, and we're almost back down to the ribbon test in the blue arrow right here. If we pop out of the oversold right now, it would be a black arrow. If we pop out of the oversold right now. All right, now I went through a little analysis on the black arrows this morning for everybody, and I was saying, look at the black arrows. Look how far you got from your entry to the prior swing high. See how much you see if you're comfortable risking. You know, in this case, 20 ticks to take that trade. It's going to be a black arrow here on an up close. Now, it's pretty close to the ribbon right here, so this is probably going to work out. If you get the up close and you wait for a little bit of a pullback on it, because it's going to be a black arrow right now. If I had the black arrows on, this would be a black arrow right here. But if you wait for a little bit of a pullback because it was so close to the ribbon, then you have a little bit more room before you hit your stop, and it should go up to here, right? Okay, that's what it should do. Now it's hit the ribbon, so you can take the up close on this. If it pulls out of the oversold, it would be a blue arrow. If it doesn't pull out of the oversold, it's still a valid trade. Okay, now it went through the ribbon, so it's not a valid trade unless it pulls out of the oversold. Because right now the black is going to be in the silver, right? It's obviously in the silver right now, but this would be a green arrow on an up close right here. If it pulls it out of the oversold, it'd be a green arrow. And now it's probably no arrow at all because the black's probably in the red. You see how that all came together? Little by little right there. If we put the red on here, you'll see the black is in the red right now. See? That disqualifies all long trades. Does that help anybody? Seeing it piece by piece like that coming together? All you guys that are out there that are watching, who are nerds and passport guys. Did I shut lines off on this too? If I shut off the lines, then that gets rid of the weekly trading zones too. I might have done that. No, the lines are still here. Okay, this will shut off the weekly trading zones too. Shut off that. Okay, so now we've gone through the ribbon, we're going the opposite direction, so now we need to pull back up and test the ribbon from the bottom. Let's get a blue arrow short right here. Okay. Meanwhile, over here on the yes, we're testing the ribbon from the top. And an up close on this, 71.75 to 73.75. If it pulls out of the oversold, would be a long trade. It's possible it'll be a blue arrow if it pulls out of the oversold without going down any deeper right now. All right, watch this one over here now on the NQ. That is hitting ribbon. We're going to have a blue arrow short trade there, possibly. There's a blue arrow long on the ES. I just got long on the ES. Now watching the NQ, it may not be a trade all here now. It's not going to be a blue arrow for sure. Okay, but I did get long on the ES here. I had that ES order waiting. I'm going to go to +4 on that. It should make it up here to the prior swing high at 79.50. Okay, see the number up here. It's looking pretty good. So we go to 79.50. I'm going to lock in 2 more ticks on this. Nothing here on the NQ. Okay, 8 ticks on the ES right now. And this is a 30 tick target up here. 79.50 is the prior swing high. It's got to go through that to get to continue the trend. And looking at the leg length, it should do it. we should get up there. It's come back down and take me out with some profit. But it's now 111. 111. If anybody wants to see anything, you took the black arrow. How advance? How would know in advance that it wasn't going to be blue or green? The black arrow, it didn't hit the ribbon. It didn't hit it at all. Which black arrow did you take over here? This one right here, Mike? Yeah, this one right here. It didn't hit the ribbon. I knew that wasn't going to be a blue or a green arrow because it didn't hit the ribbon. It's got to hit the ribbon to be a blue or a green. All right, if it comes out of the oversold with touching the ribbon, it's a black. Okay, and my thought on that was that it was going to pull back a little bit deeper in here. It was so close to the ribbon, I wanted to pull back a little bit deeper to jump into it on the black arrow scenario, and it just kept going, so I didn't jump into it. But I waited, and now it's got nothing right here. It whipped right through the ribbon, and right back through the ribbon here too. But the ESC was saved. Did I wait on that? Or did I actually take that? That's not on that? I don't remember. I think I remember saying I was going to wait. I don't remember. My brain's a little worn out right now. There's a lot of trading this morning, it seemed like. All right, so this needs to put in a higher swing right here. Needs to put in a higher swing. And this right here is a black arrow because it didn't hit the ribbon. Bottom of the oversold. It's a little bit bullish. I don't think we're in a no trade zone right here. We could be in a no trade zone. I'm not sure. Did I check that? We could be in a no trade zone right there. So, we're not. Okay. So just trading for what you see right here. Now, if you're just trading the blue arrows, you're just going to wait for it to hit this and come out of the oversolds at the same time. That's going to give you the blue arrow. So right here, we almost have it right now. Right now, we have it, okay? If you get an up close without going any lower, it'd be a blue arrow. If it goes lower like that, and you get an up close and it pulls it out, it'd be a green arrow right now. And now it's not going to be anything. Okay. Hey, that's funny. I just realized we have two mic R's at the same time. My car that I was talking about a few minutes ago wasn't the one that texted me. My car in the city. Not my car. A little further out west. He texted me his long trade from 570, 578, I think is what it was. 570, 587, something like that. This morning. But on the time frame that he uses 2-to-1 risk reward ratio. And he's got a big stop, but he's got twice as big a target. And he hit it this morning. All right, so over here right now, you see this right here. Let's stretch it out. See, the black is not in the green right there. It did not come onto the oversold. The black is not in the green, so we don't have a trade right there. Now, this one gave us the blue arrow because it's touching the ribbon right there. And it just popped out of the oversold. It's touching that ribbon and popped out of the oversold. That's why you get the blue arrow on that. Sometimes you get the blue arrow when you don't expect you're going to get a blue arrow. Because it's already hit the ribbon and started to move away from it. But that's a valid blue arrow right there. It should make it up to the prior swing high. Here, I just took that. Here it is. It should make it up to the prior swing high up here at 58. Needs 4 ticks in profit above that stop to break even. And the ES still hasn't put in a higher swing. I'm happy to have taken the 8 ticks that we got out of that. The NQ is just choppy and sideways here right now. So you can't do anything with this. If you're just waiting for the blue arrows, we're not getting anything like that here right now. The NQ, okay. You want this to go up just a little further here. Let's continue to confirm that with me. Totally forgot about that call. So this needs to put in a higher swing to give us anything here. This needs to put in a higher swing to give us anything here. And so I'm going 4 ticks in profit on, and my stop is 10 ticks away. It should make it up here to the prior swing high. That's what it should do here. It did not go 4 ticks in profit from the entry. We have a perfect entry on that too. So we should be okay with trade here on the crude. Any other questions? Anybody? Here we go. It needs to go up. It was almost there. It's at the 3rd tick. It almost made it to the 4th one. I think it'll be all right. I think. Okay. We want the higher swing here. There we go. One more. There it is. I still got a pretty good feeling for this. I was looking at the leg length on it. It should go a little further than the swing high, but not too much further. All right, I'm going to lock in 4 ticks on that. Right here is a good number. Right there, you can see it in the DOM, and then I'll be with the leg length too. We're doing leg lengths. We've got a higher swing over there on the NQ right now, but we just got a higher leg length on this. So there's our leg length. That's about what it should do, and that should put it right up here, 68. So that's even better than the 60 number. I'm gonna lock in 6 ticks on this. I'll bump that up some more. Okay, we just about have our higher swing here on the ES too. Okay. We're on the NQ. We're getting just a little bit higher. And we're out of this on the crude right now. And back here now on the NQ, we want that to pull back and get down into the oversold. We're only doing blue arrows on that, so it's got to get into the oversold, then it's got to hit the ribbon. Okay. So we got a little bit of profit on this Russell trade, right? Not Russell, on the crude trade. It did get up exactly to the prior swing high right now so far. And it's going to go through that finish that leg length. All right, the Russell made a nice move up. The ES is getting a higher swing, so all the indices are starting to move up. Now I took a quick look at this a few minutes ago. And this is the NQ. We got up to this weekly trading zone on the NQ, and I was saying that this morning. Once it breaks out of here, I was thinking we get up to the weekly trading zone. I said it all this morning. We did get there. I don't know where it's going to go now, though. I don't know if it's going to get rejected by that weekly trading zone or not. The gold, I hadn't really looked at gold much this week because it was doing this pretty much all week. It looks like it's trying to pull back up and bounce off the ribbon. The ribbon happens to be right here at the weekly trading zone. It's got a loose spot to get up there. It's right in here. The black step line is crossed inside the MA1, suggesting it should go up to the ribbon. It's just taking its sweet time to get in there. So the NQ did that. The ES now. I was thinking about the ES and the NQ. We're going to move. I don't know where the ES. Okay, the ES has a zone up above it. That's where that's headed up to. Right. That's where that one's headed up to. And the crude is jammed up down here at this weekly trading zone. It should head up and bounce off the ribbon right here. All right, that's where the crude should do. I drew this level in here a little while ago. Right, it almost got up to that level a little while ago when I drew it, but if you just extend that out right now, that's where the BBC is right there. It should get up there to hit the BBC ribbon. And the Russell is all over that spot that I drew on that this morning when it was down here. This is the spot that I drew on that. And that should also hit the ribbon. It almost got it right there when the black step line crossed inside the MA1 right there. Okay. Oh, I didn't even see that blue arrow there. That would have been a break even had I taken it when he takes into profit profit at least, right? 33.50 up to 37. So it went almost 16 ticks into profit. 14 ticks. And while I was doing that, we had this blue arrow over here. Oh, that's a blue arrow we did take. Okay, so here on the Russell right now, we have a chance for a green arrow right now. It's got a low of 63.5. And if you add 8 ticks to that, you get up to 64.3. Okay. And we have nothing here on the crude. And over here on the NQ, we're looking for that to pull back up and test the ribbon there. There's the green arrow on the Russell. Stop going to break even on that. We'll lock in 5 on that. It should go up to prior swing high. We have the weekly trading zone right up above it. So above 66.6 is the zone up here. I can't see what it is, but bring it down like this. Zone's up at 68. I doubt that it's going to make it right up there in one move. All right, so I'm going to be happy to lock in 10 right here. And the prior swing high is up here at 66.6 or 7. Lock in more than 10. It's 13 right there. I'll be happy to get up to that swing high. That'll be a nice number right there. It'll be 22 ticks if we get up to that. Right, I was just going to lock in 16, but it looks like I'm going to get out with 13. It should continue up. Now this right here is going to give you a green arrow right here. Right, I don't have the green arrows turned on. I don't have the black arrows turned on, but this is a green arrow because it pulled up deep right there into the ribbon. You see that? No, I didn't see this blue arrow triggering here on the ES. This went up to the prior swing high, but no further. So I'm glad we took on that. It didn't go any further. So the markets have been really tradable, and you can see the blue arrows doing really well. It's a good end of the week, I think. After we had all that difficulty earlier this week, if you look in here at the spreadsheet, at the end month, but the beginning of the week, 65, 95, and then we managed to get up to 157, and then finally, yesterday and today, we had pretty good numbers, and today it just keeps going. So it's really tradable in here. It's right here is not a blue arrow, but it is if you didn't have the green arrow, this right here, I'm sure is right there, then you'll be able to take this bounce off the ribbon right here because it just hit the ribbon and come onto the overbought, so you're not going to have any kind of an arrow. What was I thinking? All right, so this did get up right up to the weekly trading zone. That's good. This put in a higher swing. That's good. This needs to pull itself together here, but get up to the weekly trading zone, back up to the weekly trading zone up above. We have we have a higher swing here. We need that to pull back and test the ribbon. What time is it? It's 1:25. Okay. Totally forgot about the time. All right, we need that to pull back and test the ribbon, which it is doing right here. 77.25. We buy in 79.25 right now on ES. 79.25. Now this leg length is about the same as that leg length, and this pullback is about the same as that pullback. If it doesn't pull back any deeper, then this should be a good trade right here. Okay, I don't like that the NQ is dropping right here, and the Russell is dropping right here, and now it did pull back deeper. So now it's not as good looking of a trade as it was a minute ago. I'm gonna cancel it for right now, and we'll see what happens here. Right, all the indices seem to be dropping. Crude failed to put in a higher swing. Both of these did put in the higher swing. So nothing here. Nothing there. All right, on the NQ, we need that to pull back up. All these other ones just fell right through the ribbon. So pull back up and test the ribbon and give us that blue arrow. That's what we're looking for. All right, so if you were just trading the blue arrows, this is how you would do it, just like this. This might pull down and hit it, but it didn't touch the ribbon right there. Came out of the overbought, so what you have right here is a black arrow. Right? You have a black arrow right there. So I'm going to wait for it to actually hit the ribbon. There it is. That's going to hit the ribbon on a down close. It's going to have the ribbon all over it, I think. Right there. Oh, it didn't give us a blue arrow. We didn't come out of the overbought. We didn't come out of the overbought. We did hit the ribbon, but we didn't come out of the overbought. Oh, that was so close. You tricked me. And I put the trade on. I put the trade on. I just got ratings on it because it was a valid trade here. This is the equivalent of a blue arrow. It just didn't come out of the overbought because it hit the ribbon and it gave you the down close with everything bearish. The black would be definitely in the red right here. So that's still the equivalent of a blue arrow. It just didn't come out of the overbought. Picked up 30 ticks on that. Right, it's 128 right now. And we didn't put in a lower swing from this. So I can't take another trade because we didn't put in a lower swing from this, but you guys still make another shot at it here. If you didn't take that with me, you make another shot at it here. It still hasn't hit the ribbon yet. One more tick up. There it is. Now it's hit the ribbon and it's not in the overbought again. Now it's above the ribbon, so it'll be a green arrow right now. We only overbought it down close on. This would be a green arrow right now. I'm not going to take it because it didn't put in a lower swing. And up close is going to disqualify all trades, but a down close would be a green arrow right now. You see how far above the ribbon it is right there? That up close, that just disqualified all trades. Okay. So I got that 30 tick one right there where it was off the ribbon. That's a ribbon trade, right? Without the slingshot. If we go here to, let me go here and show you what I mean. If we go here to trade rolls, that was a short trade without the slingshot. That one right there. Black line in the ribbon must be on top and in the red. I mean, I don't have the red on it right now, but if I put the red on, you'll see this squarely in the red on that one. Right in the red. Bang, right there. So that was a ribbon trade right there that I took. Well, this has been fun. I'm not sure. We might be in a no trade zone right here. I'm not exactly sure. But I know that this is not a blue arrow. There's no blue arrow right here. So let me just do one thing really quick here with you guys that are watching and paying attention, that are in there from the morning. Okay, let's just get rid of that. Hold on, black and green arrows. Okay. So right now, what we have is, let's go all the way back here. Well, let's just start where we started at 1 o'clock. Okay. So all the black arrows were priced did not hit the ribbon. This is Michael R. This is, the price did not pull back and hit the ribbon, but we were bullish and we came out of the oversold. This is where you got all your black arrows. Where we did hit the ribbon, this is where you got your blue arrows. We went through the ribbon right here. If we would have come out of the oversold right there, you would have had a green arrow. But because we hit the black on that, the black's not in the red or not in the green anymore. So that wouldn't be a trade because we didn't come out of the oversold. Right here we came out of the oversold, but we didn't hit the ribbon, so we got the black arrow. Right here we came out of the overbought, but we didn't hit the ribbon, so we got the black arrow. See, out of the oversold without hitting the ribbon, black arrows. Hit the ribbon, came out of the oversold, blue arrow. Hit the ribbon, went through the ribbon, came out of the oversold. That's why you get the green arrow there. Same thing with the green arrow there. Black arrow here did not hit the ribbon. And over here, that brings us to current. That was the whole session with the NQ, with just looking at the blue arrows. And if you throw the other ones on, you can get a feel for when they're coming, right? Which arrow is going to happen when. And that's ideally, that's where everybody, right? You want to have a pretty good feeling for when you're going to get the arrow and what it's going to do. All right. Well, this has been fun. I'm going to pass it out to Fabulous Phoenix, Arizona. I think we're done here, and I have another meeting coming right up. I forgot about it. I just got a text message. So I'm going to pass it out to Fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, it's the largest city park. Wait, before I do that, okay, well, I can say it anyway. If you have not taken a free trial of this, I totally forgot to do this. If you have not taken a free trial of this, you can go out to mytradingiq.com. Go to mytradingiq.com and sign up for the free trial there. Okay, the purple button. There's no credit card required for the free trial. Go to mytradingiq.com and hit that purple button to take the free trial. Do it today. We'll get you set up over the weekend. Okay? All right. With that, I am passing it back up. You have it, Dwayne.
Okay. Recap of the morning session.
This morning, it took 18 minutes and 7 trades to get to $3,290 with 14 contracts.
Good job.
Thank you. Thank you. And thanks for the reminder, John. All right.
Okay, guys. Where we left off, we were on crude. That's where we opened last night. Again, the CTAs were published. The report came out 10 minutes into the life of this candle. Price is trapped between resistance overhead, support below. So it gets pinched up into a bunch right here. Pull back to the BBC, holds more often than not. And down we go to the target. We hit the target, we catch a bounce, resistance at the step line, and then that sends us all the way down to the weekly trading zone at 72.15/72.20. That is this week's lowest weekly trading zone for crude. And these are the zones that were published Monday morning for all of our members and trial members at 6:15 a.m. Eastern. And here's gold. It's where we opened last night, pulled down to the zone, found support, tried to move higher, but could never really pull away from the BBC. And then right here, 8:30 this morning, as the news came out, the price dropped 2 zones and found support at the zone. When the market finds support, it will go look for resistance. Now, notice the black step line. On the way down, you had the perfect stack, price, step line, red and falling, BBC. But once that step line crosses red and falling, what's most likely to happen is price will pull back to the BBC. Pullback holds more often than not. If the pullback doesn't hold, and you've got a nice window of opportunity up here, and then if the pullback does hold, you'll have a potential for a long trade to the downside. Silver. First we opened, we came down to the BBC, the pullback held, we were at the weekly trading zone 2319/2320, so that's support times 2. Price gets above red and falling turns to blue and climbing, and we come a little bit shy. 23.35, we missed it by 2 pennies, but it only takes 2 pennies to get your goal for the day with silver. Like this candle, opened at 23.29 and ran up to 23.34. So that'd be 5 pennies in that candle, $250 per contract traded. For the 10 contract trader, would be $2,500. Now, this high right here failed to take out yesterday's high. That's a sign of weakness. So price trades through the BBC this time. See, the pullback held, and it held, and it held, and it held, but we know eventually it's going to trade through. And this is a prime example. Drop to the zone, find support, catch a little bounce, and then we rip down through quite a few zones to put in a low down at 22, or to hit the zone at 2267/68. Still one more zone below, but the market found support here based on price action back here. And so now we've rallied up to the weekly trading zone, which we expect to be resistance until proven otherwise. But again, the step line has crossed red and falling also on silver. So we may see price overcome this zone and pull up to the BBC. If price chooses to consolidate at the zone, which is what happens 70% of the time, 20% of the times rejection, 10% of the times the slice. If we just consolidate at the zone, then the BBC will drop to meet price, which is a different dynamic than price pulling up to meet the BBC. And on the euro, here's where we opened last night. Up we go to the long target and the weekly zone. And then we get that rollover on that news this morning, and it takes us all the way down to this weekly zone, where we've been consolidating for a number of hours. The step line has crossed red and falling, so anticipate a pullback to the zone and potentially the BBC, and then be prepared for another leg to the downside. If price overcomes the BBC, well, then you've got a nice window of opportunity right here. Then back to the daily chart. We're off the high of the day. We did put in a new high today. Yesterday, we stopped dead in our tracks right at the 38% fib extension. The next obstacle overhead is the 50% fib extension. Now, should things change between now and the close today, support is at the low of today, and then below that, support is at the daily BBC and the 24% fib extension, where we found support back on Wednesday. To become a lifetime member, go to mytradingiq.com. If you have any questions, call 949-42-EMINI or send an email to support@cfrn.net. As a passport holder, you have lifetime access to everything we do, everything we've ever done, and whatever we do in the future, with no recurring fees, no upsells, no nonsense, ever. You not only have access to the live training room every trading day, 2 hours and 10 minutes, but you also have access to unlimited one-on-one private mentoring. The strategy that you learn and the indicators that you own for life as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's been in place since the inception of the markets and will remain in place until the markets cease to exist. Why? That's how markets work. Passport is everything a trader needs, all under one roof, one low price. And along with 2 hours of live training every day, unlimited one-on-one private mentoring, you also have around-the-clock support via Telegram. mytradingiq.com. results.com. 949-42 Emini, support at cfrn.net. Let's wrap this week up with our good word for the day. All right. 2 Kings 3:25 says, the slingers surrounded and attacked it. Now, there's a term you don't hear much anymore, but back in the old days of politics, it was called mudslinging, where you tried to cast doubt on your opponent. It's literally what it sounds like, slinging mud at one another. In Old Testament times, slingers were people who defeated others by slinging stones and blocking their wells by throwing mud and rocks into them. Wells of water that were essential to their survival. Today, mudslingers are people who make malicious attacks against others. Now, chances are that you may have encountered some mudslingers yourself and even suffered at their hands. What should you do? Avoid them because they're dangerous. You can't mud wrestle without getting dirty. Not only will your opponent win, he will enjoy the fight. And if you yourself have become a slinger, here is a portion of scripture you would do well to keep in mind. If you take away the yoke from your midst, the pointing of the finger and speaking wickedness, if you extend your soul to the hungry and satisfy the afflicted soul, then your light shall dawn in the darkness, and your darkness shall be as the noonday. The Lord will guide you continually and satisfy your soul in drought and strengthen your bones. You shall be like a watered garden and like a spring of water whose waters do not fail. That's Isaiah 58, verses 9 through 11. Now there's a benefit package worth working for. So guard your thoughts because they become your words. Guard your words because they become your actions. Guard your actions because they become your character. And guard your character because it determines the level of God's blessing in your life. So, here's the word for today. Don't be a mudslinger. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. 888-866-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.